Well, now that 2012 has ended, the picture that we can see for all of 2012 is that prices rose about 3% in the year. It started a little higher at the beginning of the year and finished a little weaker. Now, if I go back and put that into context, I compare how prices have fared since 2004, and I bring you right up to date to the end of December 2012. Well, if I use some other major indices, oil has risen about 200% in that period. Coffee has risen about 150%. Gold has risen 300%. But in that period, hotel prices have only moved 7%. Now, it is a patchy recovery around the world. And if there is somewhere spoiling the party, that's the EMEA region, which is Europe and Middle East. Prices actually fell in 2012, 0.5%. And to give a little bit more context, in North America, prices rose 5%. Well, we were saying earlier that Europe is spoiling the party and that European prices are actually falling year over year. Now, there's a lot of factors that are affecting that. One, of course, is the economic austerity that is present in Europe, and that is dampening appetite for travel. There are also other government-affected initiatives. For example, here in the UK, air passenger duty went up fully 8% in April of 2012. That is dampening the UK. As we look at the green agenda, as it advances in Europe, and we see that airlines are now paying emissions fees, and that is seeping into air costs. Now, why do I bring up the air passenger duty and the emissions fees? Well, as air prices go up, we would expect hotel prices to come down. That is usually the way that these things happen. As we look at other factors which tend to influence leisure prices that people pay, corporate travel has not had a particularly strong year in Europe, or indeed in most parts of the world. So there isn't extra pressure on the occupancy coming from the corporate travel, and therefore leisure is also relatively weak in terms of pricing advances. As we move around Europe, interesting to see that from an already weak price base, Greek hotels actually fell farther. They fell fully 7% in euro terms year over year. So that is a further calamity in a sense for the country. And here in London, where you would have expected the Olympics to be driving a very solid year from hotels, again, if you look at domestic stays and domestic prices, those fell back fully 7%, which is a surprise to us in the industry. Well, turning now to North America, we ask what has driven pricing in North America 5% up year over year. And I think the first and obvious thing to say here is that the recovery in the North American economy is principally driving this. And it has driven hotel pricing in many major cities into double-digit year-over-year price growth. If we look at some cities, such as San Francisco, which are now at peak occupancy levels, so the hotels are really, really very full. The only thing that hoteliers can do, and of course they do this, is to put prices up. So we're looking at San Francisco, and we're seeing that in US dollar terms, those are 12% up year on year, and even more extraordinarily in sterling terms, they're up 20% year on year. The other thing that's happening in America is that airline capacity has remained very, very disciplined. And on top of that discipline, there are now a lot of merger and acquisitions activity going on. And that is driving air prices very, very sharply up. And as air prices rise, hotel prices get depressed. So there is some brake holding back hotel prices, without which prices could have advanced even further in North America. Well, hotel prices in Asia grew 2% in the region, which was a little slow in terms of growth to our way of thinking. Now, on the negative side, the economies in the region were growing a bit more slowly than perhaps they expected to, because many of them are dependent on the economies in North America and in Europe, which haven't been growing quite as fast as was hoped. And the other thing that is weighing on prices in the region is the dispute in the East China Sea over those islands that both China and Japan claim. That has not helped in the period. Now, on the positive side, the huge momentum behind the Chinese outbound growth. Of course, visa restrictions are easing, there's far more air travel, far more air options in the region. That is lifting travel. And in particular, that is lifting travel to Hong Kong and to Singapore, and both of those places are enjoying quite strong rises in pricing. Well, some of the other factors affecting hotel prices in Asia are essentially the economic center of gravity of the world is moving east. When we look at the number of new hotel rooms that will open in 2013, we expect 40% of all new hotel rooms in the world to be in the Asia-Pacific region. And of course, travel is intensifying in the Asia-Pacific region, and much of this is air-driven. In China alone, they expect to open 70 new airports and expand 100 existing airports. And low-cost or low-cost carriers rather in the region are expanding very, very quickly, such as Air Asia. Now, what's happening is, following all of this air travel, is hotels will be built and expanded on the back of this. So new hotel rooms are clearly being built. In Asia Pacific generally, there just aren't enough hotels per head of population. Well, the most important technological trend we see at the moment is the rise of the mobile booker. So Hotels.com has about 15 million downloads of its apps out there in the market at the moment. And we think that we're closing in on about 1/4 of all of our bookings being made from mobile devices. Now, we see two different behaviors in the market. What we see is on the smartphones, we see that those are really a last-minute booking tool, with 70% of purchases made from smartphones being for the same day. Whereas the tablets and the iPads are much more for the more considered, farther out stay. And that's a very interesting development, and we are thinking of our development being differentiated between the two devices.